Never stop following your intuition and your gut. You either follow it beforehand or you follow it afterwards. Everybody's got money today. Capital's a commodity, right? But not everybody.
Today's guest operates in private markets where trust, judgment, and long-term thinking matter more than visibility. Salvatore Buscemi is a CEO and co-founding partner of Brahmin Partners and an author with decades of experience. Mr. Buscemi is also CEO of Dandrew Partners Capital Management and managing partner of multiple direct investment vehicles focused on basis-driven opportunities in real estate, credit, special situations, and private operating companies.
Anybody can hide behind a spreadsheet. What families want and investors want is they want the interactivity, but they want the person with the salesmanship who not only had the ability, grit to have an exit, but to be able to do it again by learning and expanding upon the skill sets that made him successful in the first time. Do I trust this person with my wallet? Do I trust this person talking to my investors behind my back? And if you can't answer those two questions, then don't make the investment. There's many opportunities. There's more opportunities than grains of sand at Miami Beach.
So what do you think is the differentiator between a good investor and a great investor? All right, welcome back to another episode of Built for This, Stories of a Maverick, where we explore the minds and methods of the Maverick shaping the future and business. Today, I'm joined by Sal Buscemi, investor, author, and managing partner of Brahmin and Dandrew Partners and several private investment funds. With over 2 decades of experience across private credit, venture, and real estate, Sal has built a reputation for spotting value where others see risk and for leading with clarity, precision, and an unmatched ability to connect capital with purpose. In today's episode, we're going to unpack his journey from his early days to becoming a multi-asset investor and mentor for a new generation of founders. We'll talk about what it really means to be an intelligent investor in today's market, how AI is transforming the future of capital allocation, and why emotional intelligence might just be the most underrated trait in the business. Welcome.
Jenna, it's a pleasure and a privilege. Thank you for having me.
Awesome. I'm excited to dig in. And I love to always kind of start with the beginning because I think it's fun for people to understand where we all get started and see that not everybody has this, I'll call it perfect entry into the world and making it in business. So I'd love to kind of understand a little bit more about your early life and sort of how you got into the finance world.
It was merely by accident, although I always had some sort of a curiosity with finance. I mean, I'm old enough to remember my parents, anytime I made any money as an entrepreneur, mowing lawns or doing something, they'd put it into Series double E savings bonds, right? So I always had an understanding of that. My dad had an understanding of it, but he was more of a doctor. And growing up, doctors were seen as being, sort of like a permanent upper class thing. You were respected. I wanted to do that. Went to school in New York, had a great internship. The problem is that before my junior and senior year, I passed out at Beth Israel North, which is now condos on the Upper East Side near Gracie Mansion, holding a fibula in my hand. And I passed out and hit the ground. And I woke up with smelling salts. And I said, this is not really going to be for me. Like, I'm fine working with like the microfiche and the books and doing the research and everything. That I don't think I'm really going to be a happy PhD. And looking back, what I had a call, I called the doctor that was championing me, and he had a beautiful wife, drove an Aston Martin, lived in Gloria Vanderbilt's building, over on Cole Shoals Park over there. And I said, this is who I want to be. With the Hopkins, he was championing me. And I called him and, I ignored him. And this is when cell phones were first out, like, the Nokia 5150s. And, I really appreciate everything I'm doing, but it's taken me a long time to get to this point to tell you that I don't think this is really for me. And I appreciate everything you've done. I don't want to let you down. He's like, no, 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 no. So in his very New Yorker accent, he said, Sal, he said, look, I've been talking to my brother about you. He just made partner at Goldman Sachs. He wants to talk to you. And that became like a whole different understanding of how the, world of finance works, not just so much with numbers, but as far as salesmanship. And one of the things he told me was, my brother, he just hangs a shingle on Park Avenue and people come to him, right? But with us, you're selling ideas. And that when you start getting around that, then you start to really understand how capital flows and the reasons for it. And since then, I'm rushing ahead. We've been able to help entrepreneurs raise capital using those same qualities or values or what I call talent stacks or skill stacks that you're able to use in order to raise capital meaningfully for a lot of things. Let's face it, America's a great country. Everybody comes here to start a company. Everybody's got a side gig. Somebody's got something going on besides a podcast, right? They're raising money for an initiative or something like that. But they don't know where to start. And it's also to them, it could be like a very humbling experience. So That's why I wrote my third book, Investing Legacy. Anyone who wants a copy of it who's listening to your podcast, Jenna, I'll tell them at the end how they can get a free copy autographed. No charge. It's on sale.
And so, in terms of when you kind of had that pivot where you're like, okay, doctor's not going to be happening, so I'm going to go the other route, which is going to be the finance route. Was there kind of a moment that really sort of drew you into the world of investing? Because depending on which route you go, it's definitely not for the faint of heart.
Yeah, you're right. I mean, you have to have a type A personality, right? And people would see that. And I don't think anyone would really accept me into their firm if they thought that I wasn't going to be really good with that. And there is, that whole like, that drive, building a career, not a lot of people have that, right? I mean, unless you're born in the Northeast, or, generally speaking, and you went to a school there, those are some of the values that are instilled upon you. If you live over in flyover country, your career goes a different direction, right? And it's only because of the opportunities that are near to you. And that's all due to one word, and that's your network.
Yeah. And I mean, obviously, New York, notorious, Wolf of Wall Street, all the things that come with it, whether you're familiar with that world or not. I've had the experience of interviewing lots of different finance people for different roles in different companies and kind of seeing, I'll call it the old school traditioner kind of broker, wheeler and dealer, and then, everybody in between from burnout to like, this is my path. So I'm curious kind of for you with your Wall Street experience, where you start to kind of where it shaped you from a really pivotal, like, leadership perspective and how you kinda start to navigate your way through that world.
That's a good question. I think pain is a tremendous motivator if used correctly. And at 24, when I was working at Goldman, I lost my father suddenly. And I made a promise to myself that before the age of 30, I would do something entrepreneurial. And that isn't necessarily, buying franchises or anything. It was starting your own fund. And at 29, I raised $30 million from a Park Avenue investment manager. And at that point, that's where you really started to learn the leadership, persuasion, because there's a lot of guys coming out of banks like Goldman, like me, right? So you really had to differentiate yourself and you really had to be out there. And that's really where I think, the passion started to hit, is that I was given a tremendous amount of responsibility at a younger age. I wasn't married. I was dating a girl at the time. I really didn't like her that much, so it didn't matter. But the point is that, you know, I was able to rinse, wash, and do that again, out west in Southern California and Nevada, where during the housing crisis that happened subsequently after Bear Stearns, we did it with commercial real estate. And then, yeah, I mean, but leadership also, just to be honest with you, Jen, it doesn't necessarily mean you're going out there and buying everything. Like I got outbid by a bunch of doctors and dentists on let's just say, necessity retail. So let's just say CVS anchored stuff, or CVS's, but in middle
Yeah.
America. And these things were trading at what we call a cap rate at 10%, right? And they've been trading at this going back to Moses. But what happened is a lot of people bid up the asset. The return was lower and I couldn't compete with it. So I had to hand back a lot of money to investors that I had raised. And that's when you started seeing other influences come in. And that's how I found my partner today, is that, well, you're so good at real estate and all this. Why don't you turn your guns on us? And these are families that were serially successful. And they were like, look, why don't you work with us? Since then, history has been written. We have a tremendous track record. We have some companies that are growing slower than others. We've already had one exit. We're also in high profile names that you and I were talking about before this, such as SpaceX. We're doing our sixth into that right now. And I won't be sleeping probably until the weekend if everything goes well. And we've done Stripe at least 2 times as well. So we like that. There's different reasons for different investors getting into those deals. But when we look at these opportunities, the leadership is also to be able to communicate to your investors what you stand for and what you don't stand for. And I'm not saying like I stand for morals and values or anything like this. I said I have 2 rules. I don't care about the industry. I really don't. But 2 rules. Number 1, no first-time founders, okay? We're not Shark Tank, we're not tuition. So the more exits, the better. We have one CEO, Thomas Forrest Farb Horsch, CEO of Thrive Bioscience. He's on he's had 17 exits, and Thrive Bioscience will be his 8th unicorn. We like that. So that's rule number 1. Okay. I don't care about the company after I hear about it. Like, sure, I do, but this is just the pre-qualification. All right. This is the speed dating by Sal. All right. And the second is I want in-kind family offices leading the cap table. The cap table is the soul of the asset. The management team is his conscience, or really the board is his conscience. But when you look into it, I want to see like big families who have done this. What you don't want to see is a large Sandhill Road institution with only $250,000 in there because they're going to throw a wrench in the monkey works and, maybe force the founders to do things that might not align with where they are right now, or force them to sell or exit or do some sort of liquidity event that would harm other investors. So families, long term, I like it. But I also want the families to be in kind. What does that mean? You don't want a real estate family leading a life science investment. You want a
Right.
life science family leading a life science investment. And that's what we really like. So now, okay, we've gotten through this. What's the story? Right. And now I really want to know what it is. And, that's how we do it. And that's how we qualify it. Because again, I always like to work with the best, but there's a term out there that one of my friends, you should actually interview, Dr. Olivia Scheller. She calls it bubble wrapping. And when you bubble wrap yourself with people who are smarter, richer than you are, it's really hard to go wrong. Case in point, we invested in a company called AI Scout. It's called AI.io. And what it is, if kids who are soccer players or looking to become professional athletes, they can be rated on an app using AI. And we made that investment 3 years ago. Since then, the Saudi investment fund invested $50 million into AI Scout or AI.io. So we like that,
Yeah.
because we followed world class, we follow our rules. So, you got to have something to stand on. And to me, that's the leadership. And we never go outside of those bounds. I mean, we have
Yeah.
once on special occasion, but these founders, their fathers were world-class exited life science people,
Yeah.
and they were able to get the youngest designation. They were the youngest team to receive FDA designation for an artificial defibrillation device that every mom municipality is going to have, and they will have, they already do have in their purses and in their equipment.
And I'm curious, the venture world can be sort of cutthroat. And as you mentioned, like surrounding yourself with the right people who you know and really building and maintaining that ecosystem and ethos. And I'm curious, for you, what was that, ability and or kind of like magic sauce that you saw to be able to kind of get into that and surround yourself with those type of people to really be like, hey, you know what? I got something here and my ability to do X is what's going to allow me to kind of continue building that momentum versus the people who kind of, launch their first fund, but that's all they're able to really kind of get going and it just sort of trails off from there. So how is your, we'll call it like secret sauce, that ability to kind of like,
I'll be honest with you, that's a good question. I wrote a book, and if I see someone like you, I'm like, hey, I just wrote a book. If I know who you are, right? Like if you're a family or you're an investor or something like that, I just wrote a book. I'd love to have a copy in your hands. Would you like an autographed copy? People are like, what the hell is this? This is nobody, everybody gives me a business card or 20 megabyte slide deck, what we call deck pics. You know what, on your iMessages, like I just met you on a yacht. I don't trust you, but why are you sending me a 20 megabyte, hey bro, this is my latest entertainment venture. I'm like, of course, it's Southern Florida, it's Miami, right? Like whatever. But what I will tell you is that you gotta treat these people like you're trying to seduce them or, marriage. I think during the pandemic, what happened is it turned a lot of people into being transactional, and I think Shark Tank did a huge disservice to this country, by just thinking you walk up to a rich person, you can grab their ass. What happens when that happens in real life? You get smacked, and, other places, you get blackballed. No, and I always tell my founders this, and even one of them, I'm like, "I don't know. I don't think she's interested. I think she's kinda, like, ward off." I'm like, "That's because you grabbed her ass too soon. You asked her for a check." Like, yeah, like, it just
yeah,
relax. It's true, and it's like when you start talking to these people, because these investors, these families, they're not really so much about losing the money that they are, but it's like losing face and losing their reputation. So, the way I do this before I go into any deal, there's due diligence, which I think, yeah, I mean, you do diligence on the market and the total addressable, market and things like that. But the real due diligence is to act like a jealous, jilted ex-lover. All right. I want to know everything. I want to know everything about this guy before I put any money into it, because that's going to, and you don't judge people by the personal life, but you just want to know, okay, has he been a plaintiff 5 times with different lenders or investor groups? Like, I don't want to be with that guy. You'd be surprised what you find today, and you just got to make sure that you're consistent too. And the way I've done that is I put together like a WhatsApp group called the 305 Intelligentsia, and that's a bunch of displaced New Yorkers and Bostonians who moved down after the pandemic and never went north.
Right.
And they're cynical at best and paranoid at worst. But, when I invite people into it, it's a circle of trust and people really, understand that and that really helps out a lot. So it's the consistency. And if you look at it, if you were courting someone for marriage, you want to see them more. I think what we do is I always send out an email to people. I have the weekend photos that I put out there because people want that interactivity. That interactivity is new currency. And if you don't have anyone's attention, then you have no currency.
And so how do you and I mean, you start to build that muscle, I'll call it kind of that like that intuition, that like gut where you're like, yeah, I know what to do.
Oh
I know how
yeah.
to do it. But how do
Yeah.
you kind of balance, I'll call it, experience that gut feel with like the analysis of that decision making where you can kind of get sort of sometimes I think a little bit more relaxed without sort of that analytical eye coming in with like the different deals when you have those networks that are kind of that close access.
With the critical eye, I mean, things that are the deals we get into are presented to us because of our reputation and the fact that we're going to close on something. And they usually are what I call, mice door elephants can't. So we have a special legal structure that allows us to invest very quickly. Case in point, that one deal AI Scout came to us from a guy who's in fifth chapter of my book, whose father, Harvey Walken, was a very successful equity investor, built Wacker Drive in Chicago, but then parlayed those proceeds in the bandwidth from the U.S. government in the 50s and the 60s. And so when he calls and he says, "Look," with his authoritative, Chicagoan accent, he's like, "You," and I know he's had a few beers in it, but he's shaming me to get into it because he's dropping names of these guys. And he's like, "Hold on, I'm gonna get this guy in the fun." I'm like, "What?" I'm like, "This is like a big guy, maybe not. I mean, maybe
Yeah.
someone you would know, but most, maybe let's say a professional sports owner that has a huge family office that invests in Fanatics and
Yeah.
FanDuel and things like that." I'm like, "Of course I am." That's the first point because you want to see the smart money going into this and doing that. But of course, I want to meet the CEOs and all of that. Those are usually a little more for sophisticated people with networks and access because it takes trust today. And since the pandemic, you've had 200 years of credit creation crammed into the federal government. Everybody's got money today. Capital's a commodity, right? But not everybody. I don't want all my capital on my cap table. I don't want to work with them. So I'm only going to work with the investors, just like the founders, who I trust.
No, I'm curious too, from your experience dealing with, all these founders in the company, some more, we'll call it, before you get access to the serial founders that have, hit their eighth exit, that we'll call them are the up and comers, maybe had one and looking to kind of repeat. From your kind of, experience, what are you seeing from the ones that are we'll call it the ones that are ability to do it 8 times over versus kind of one and done? And is there any sort of traits that you're really looking for when you get to sit down with these founders outside of just the data that
I want to see that they have the ability for salesmanship. I was in distressed real estate at Goldman, but there was a whole thing, and don't take this the wrong way, but I remember one of my friends telling me that during an IPO roadshow, let's just call it 99, there were these two beautiful UNC girls who put together a sort of glow up for nerds so they didn't scare the institutional investors on the roadshow. Does that
right.
make sense? Okay.
Yeah.
Back then, that was sort of, they taught them like where to like, shirts that fit, and, really like things you want, but they were making bank, right? Like bank. And I'm like, fast forward today, that's not no longer elective. All right. Anybody can hide behind a spreadsheet. What families want and investors want is they want the interactivity, but they want the person with the salesmanship who not only had the ability, grit to have an exit, but to be able to do it again by learning and expanding upon the skill sets that made him successful in the first time. I will tell you, like I was seduced by this founder. You think you've been seduced by, one-liners? I mean, you can imagine me, right? And I'm not nearly as attractive as you are. But this one founder, Tom, this is 4 years ago. We were at a family office conference and I gave a whole slide deck on our holdings and the success and the names and everything like that. And he turned and he goes, and he was a smart guy and he knows the names and he knows a lot of the CEOs in common. And he goes, "That's a very impressive portfolio. I'd love to be a part of it." I'm like, wow. That is like, wow. At that point, like I couldn't help
Me?
but like, me? No, but to me, it's like rather than putting your hand around, it's like, are you interested in this or have you it's just he's building a relationship, right? But it's a relationship that's set on business, but let's smell each other out first.
Yeah, for sure. And what do you think kind of along your way were your biggest lessons that you had to learn? that
I
were
think the
like,
biggest
I'll call
yeah.
it, everybody has their heartbreaks and then their winners, but like, what were some of those you're like, oof, if I could have just done that a little differently, or that was a really tough one to learn?
We lost I had one big loss, so far out of, like, let's just say 22, and everything was set to do this, but there was one thing the CEO had in his car after we made the investment that just made me say made my it sort of, like, made my stomach go to my gut, sort of like, "Am I doing the right
The
thing
big
here?"
drop. Yeah.
Yeah, and when you don't follow your gut or your intuition, you're gonna have problems later. You either follow it beforehand or you follow it afterwards, or you pay for it
Yeah.
afterwards. Never stop following your intuition and your gut. I'm not saying that you should make explicit decisions off of that. I think, the way I look at it, if I'm funding any sort of founder or anything, I would say, do I trust this person with my wallet? What does my dick say? Right? Do I trust this person talking to my investors behind my back? And if you can't answer those two questions with a yes and like a hell yeah, then don't make the investment. There's many opportunities. There's more opportunities than grains of sand in Miami Beach.
And I know you mentioned, if everything goes well, hopefully you'll manage to get maybe a couple hours of sleep or not much sleep in the next 2 weeks to close the deal. So when you're operating across kind of multiple deals, investors, relationships, like what is, your focus in order to stay grounded and kind of execute the way in which you need to, but also show up in the way that you need to?
I think to me, I mean, what I like doing in the morning, and sometimes living in Miami, the mornings turning to afternoons, but I have to go to the gym first thing in the morning. And I like
Yeah.
that because it sort of clears my head for what I need to do. I wear my bird dogs, I have my workout shirt, I have my AirPods in. I'm a mobile unit, but I think it's being responsive and just following up with people. The real money is made in the follow up. And there's people who I hadn't talked to, and all of a sudden they're investing a lot of money in the SpaceX. So like, I didn't know you were doing this. I'm like, well, you haven't opened my emails. That to me is, really the skill set that a lot of people don't have. But it's a way to be persuasive and gentle without being annoying. And I think some people, I hear it from some people, and I mean, I could show you screenshots of people like, shaming me and, you should be reading this and all. That just turns me off. Right. And the
Yeah.
other thing too that I like to place into it is that, if you do good for people and you're always of service, don't ask for anything until you're of service. Like we have an investor who just
Yeah.
has millions of dollars with us, but I've been of service to her for many years, right? So there's a
Yeah.
trust there. I've helped investors write college essays, right? I've helped, I've done a lot of things too that shouldn't be on a recorded podcast, but I've helped a lot of investors in trouble. Like, does that make sense? And I don't mean financial trouble, but
Well, everybody has things that come up and need like a good friend to lean on occasionally to help them out.
you become the consigliere. Like if people trust you with their money, they trust you with their whole life. Like really. I
Yeah,
mean,
as somebody who works with only entrepreneurs, it's a very special relationship because you get to know every facet of their life and you're the one trusted with it. So it's
yeah,
a badge of honor, but comes with a lot of responsibility too.
it does. And you just got to make sure that you have to be at heart like a people person, right?
Yeah.
You have to be a salesperson. It's not about, I think everybody thinks of sales as being like very, somebody's going to take advantage of you or, vacuum cleaner sales. No, I mean, you would not get a job at Goldman if you were not good at sales, right? And I remember when I first started, they have the whole analyst training, and then they wheel out this old partner, and he's like, "You're in sales. I don't care if you're front office, back office, M&A, ECM, DCM, FIC, whatever. You're
Yeah.
in sales, and that's how a culture's made.
Yeah, for sure. And so what do you think is a differentiator between a good investor and a great investor?
Their network,
Yeah.
nothing more.
Yeah.
I'm in deals. If it wasn't for my partner Albert and whose network, I would not be in. SpaceX.
Yeah.
It's the network. It's the network.
And how do you think about, we're talking about coming out of COVID and like network, and it's really interesting if you think about a younger generation coming into this and the ability to connect and understand how to like read people and, when to kind of step back, when to, persuade. I feel like there's this lost art a little bit because
Yeah, yeah, there is.
digital
Yeah.
digital thing. How do you kind of, you know, look at that as
You
like
have
kind of
you
legacy
have
or
to you have to push them out. You have to push them out, right? They can't network over TikTok, and they really need to build those interpersonal skills because later on in life, they're gonna be seen as being incompetent if they don't, or, having a mental illness, right? I've seen this before where guys just freeze in front of CEOs, they don't know what to do, or, investors, they don't know what to do. It's practice. It's like building a muscle. The more you build it, the more reflexive it gets. The, muscle memory, if you believe that, it works. It's like playing the piano or anything else that you do in life. You just got to, it's a skill set, and people don't look at it as a skill set. They think of it as something like a talent that they lack, but it's not. It's something you build a skill on. And if you continue to do that and you gamify it so that you're like, I get to talk to this guy. And even if these people aren't investors, if you're just talking to them, on a Zoom call every day or something like that, and it's fine because you're just building the skills.
For sure. And I think, you touched on the deal earlier of Scout AI and getting into that. And so I kind of want to pivot it from, into the whole world of AI and sort of how it's influencing the way that you're sourcing deals or like valuating or even from like an investment strategy perspective.
It's really good if, for me, I'm going to answer the question a different way. AI is
Yeah.
very hot today. And it is like investing in AI is like being a mosquito in a nudist colony, right? So we got into it before, its natural ascent, and I'm
Yeah.
not saying it's ascending, but it seems like it's plateauing and it's trying to figure out the next generation with all the power and energy
Yeah.
that we need for it. I use AI mostly as a tool to communicate with people in a way where, for content creation, for ideas that I have to do that. As relates to sussing out deals and stuff, yeah, I mean, I like, we're working on a real estate deal. I put it through, chat GTP to, see if this is really what would be an honest, exit cap rate on this deal. And it'll tell me that, I like doing stuff like that. Like I'm not, here is a pro forma. Tell me if the exit cap rate you think is really going to be online for what it is today. And it will tell me in this area, yes, 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 or no, what the competing cap rates are. It's good for doing due diligence, and it's also good for really, I think, understanding. And I've done this before, where a business fits in the ecosystem. Before, really when ChatGPT was in its infancy, somebody showed me how to use it, and we were able to find out what AI Scout really did and what its purpose was in the AI ecosystem. That helped us make a decision. Not a decision, but sort of understand it. Because then people are only going to tell you what they want you to, especially what they want you to hear, founders. But the problem is that most founders, when they're young, they try to quant-explain you with facts and things. But you have no idea where you are. So you're staring at a bunch of trees. I like to look at the forest and say, is this something that's really going to be around in the next 20 years?
And the kind of that being said, is we're kind of like, about to kind of burst out, we'll call it the AI bubble, where, it's the newest, latest, greatest thing. And now everybody's using AI as a tool and all the things. Is there kind of an area that you're looking at that's different and that's interesting that maybe not other people are looking at as like a possibility given, where the world's at right now?
I think, if we go back to like the Gen Zs, I think they're going to be the ones who are most prolific, will have billion-dollar companies with just 4 employees. I don't know what
Yeah.
that looks like right now. And, I think right now you can have all these micro sort of SaaSes and things put together to help that you can resell, and that could be the new app. But I think what you're going to start to see, and I think it's coming together, is going to be much more of, I think, the video creation. I was playing around with it during when we first launched our deal in Melissa, Texas. And, they were able to it was able to, one of the programmers was able to put together somewhat of a decent video, but I think it's just going to get better and better. My partner and I were invited to the Blitzscaling conference in Palo Alto over a year ago that was given by Reid Hoffman, who's
Yep.
kind of a controversial figure, but I really enjoy listening to him.
Yeah.
And he said something that I would never, ever forget. And he said, the AI you use today is the worst AI you'll ever use in your life.
Mm.
You know, I think the real money, if, going into it, I mean, there's only like really a handful of great ideas out there. I think it's
Yeah.
going to be battery technology, obviously robotics, right? And then energy power, right? I mean, you're seeing like all these, I think Google just got into a contract to buy an old Iowa, nuclear power plant because they need it. Like this is very prolific, but remember, no nation without energy is going to survive.
Yeah. And then in terms of, when you talk about founders and, getting ready or they're getting in that room with investors, what do you think, they like often misunderstand when they walk into that room?
I think what they misunderstand is that I'm going to answer this a different way. There's a lot of rooms with investors, but I think the higher the barrier to entry, the more successful you'll be. And this is why people join country clubs. It's why I've spent $50,000 for a month in the Hamptons. It's for the networking. Okay. It's just, it really is. And if people understand that, look, there's the SALT conference coming up. Do I really want to pay Anthony Scaramucci $5,000 plus freight to London? No. But I also know that the relationships I have there just become interconnected and strengthened as you build your web of influence.
And I'm curious, for somebody kind of hearing that and being like, okay, yes, I know I'm going to need to kind of get in these places to get in front of these people. And let's just say, from like a pure cash perspective, like I just don't know how that's going to be sustainable. What would be kind of like the inspiration or like some tricks of the trade to be able to test your way in there and make it happen?
I would tell you, I mean, there's not a single place that doesn't have a bar, right?
Yeah.
And so everybody after the conference, where they all go, the bar. And I can
Yes.
tell you, I've picked up a lot of investors or, people, I wouldn't say invest, yeah, a couple investors, but people of consequence just by
Yeah.
being at the bar, with them having a badge on. What do you do? There's ways to do that. However, if you were looking at the Milliken conference, if I didn't go to that, we wouldn't be an AI scout, and this guy would not be in my book. And if he wasn't in my book, he would not have sent it to all his friends. And if he didn't send his book to all of his friends, we wouldn't have the successful raise we have for most of our deals. Does that make
Right.
sense?
Yeah. No, it
So, I mean,
totally does. And I
it,
think
it is
people forget
the
about kind of the creative ways to go about meeting people.
No, it is, but I think you gotta. I mean, there's many ways to do it. But like these conferences, you go there because people are looking for it. It's like any other
Yeah.
conference. If you go to, like any other conference you go to, it's great. There's other things that I've seen people do. I haven't done it yet, but there's all these dental conferences too, right? And dental people are bored to the point where they have the highest suicide rate. But they're all looking to get into deals to tell their other dentists that they're smarter than they are because they were involved in this deal. So maybe you can just loiter at a dental conference. I don't think that's going to have nearly the security as like a SALT or a Milken conference, right? But you also have to think about it too, is that if you are really confident in your pitch and you really have gone through and you've gone to these like lower end red solo cup conferences where it's mostly service providers and people who say they're angel investors, but they really aren't. And they like being, they like the attention. Once you get and gravitate towards that, then the next ticket is get out to one of these bigger conferences, right? And usually somebody might have a free ticket or not. Yeah. And even in Florida, like I still go to the conferences that, I'm comp to. There's iConnections. If you're in venture, there's a lot of them. Sometimes and if you're involved in these WhatsApp groups that are local, you probably get, free tickets to these events, right? Because,
Yeah.
the promoter or something is going to give out free ones. But yeah, iConnections. Yeah. I paid for some years I haven't because the CEO let me in. So,
Yeah.
it's all about who you know, and it comes back to the network.
Yeah, no, for sure. And so as you kind of look forward and kind of what comes next for you or the thing that you're most excited about, what is that?
I think we're going to keep doing what we're doing right now. I am going to restart a podcast again soon. Probably write another book called The Art of the Raise, which I'm working on
Yeah.
currently. But I think right now it's just we're going to be for this foreseeable future with Trump in office. We're going to be, I think, our nose to the grindstone, and because the capital and me living in Miami, I know this to be a fact. Everybody, there's a term that the Brazilians call dolariza, and everybody wants to put their money in the United States. My partner and I were invited to go to the BlackRock family office private equity real estate conference. Nobody wants to invest in Europe. Everybody wants to invest in the United States. Does that make sense?
Yeah.
So, the iron is hot right now. And then after that, we'll see what happens, when the dust settles. Hopefully, SpaceX will have gone public at that point, or Stripe. But that also is going to probably give, I just like to keep straight moving because I know it's happening. And we're doing our first real estate deal in 5 years because I saw interest rates go up and then they
Yeah.
started to come down. And that's the best time to do it. The fools all go in when interest rates are low. That's when you run for the hills when the banks are giving you money for free.
Yeah. No, I love it. And, from, I guess, an investment perspective for people looking that, maybe don't have access or the funds for the larger deals, what would be kind of, your recommended approach to start to kind of build that muscle, or what would be a great way to kind of build that investment strategy to kind of, experience investing in something that you might get a way larger return in from a, private perspective?
Leadership, right? It's the network. Are you going to follow? I don't want to mention the name, but I was going to say something, but I can't. If you knew this person was a very prominent investor and he was investing in the entity, would you invest in the entity?
Well, I mean,
If he had a $4 billion IRA I mean, would you feel any more comfortable with that? And what I
It
think it
adds
is,
a level of, like, I think people look at it as, like, credibility and notoriety, like, well, if that person's doing it, but also I
it's
always look
not
at, like,
credibility, it's
that might lose.
conviction. It's conviction. Money is conviction. If somebody
Yeah.
puts 2 bricks into a deal, that's conviction. What do they
Yeah,
know you don't know? That's the equivalent of like 20 million in, real estate equity. Like
yeah,
that's conviction, and that's what you want to follow. I would suggest, first of all, they get a copy of my book and read it, which I can give to
mhm,
your, followers for free. They just
yeah,
have to email me, sal@investinglegacy.com, SAL at investinglegacy.com with a mailing address, and I'll get that out to you by USPS. The second is to go to these conferences and start talking to people and talking to investors and asking yourself, do these guys and girls really know what they're doing or not? And if you start
yeah,
asking the hard questions like I did, like how many exits, who's leading the investment? You don't want a cap table to have a bunch of nickel dimes and quarters in it, right? You want to say, is it established? Then at that point, when you start coming up to these conversations, only when you talk to people will you start learning. And that's something you can't really get off of a podcast or reading a book. It's the
yeah,
interactivity with the person, asking them why they invest into this, how much, what they expect from it, and then maybe challenging their thesis a little bit later on.
yeah, no, I love
There's
that.
clubs out there. It's all about the network though, and if you could find one person, and, I've never even an entrepreneur way when I left Goldman doing stuff, people thought I was crazy, they thought I was gonna fail, all of this stuff. Nobody who is doing better than you will ever make fun of you, and I have people who I can tell you who are championing me, who are big deals, and I really, really love it, and I appreciate it, but you just gotta get in the room with these people. Nobody's gonna help you unless they see you and all your, if you're going to like a big institution, for example, they're not going to, they'll qualify maybe you over Zoom before it was a phone call, but they want to see you in person, how you act, your ticks, your twitches, there's a lot there. People want to communicate, what it is. And, it's sort of like a character assessment, but you have to get out there and do that and start, aligning yourself with, maybe some families that you can network into and say, what are you investing into and why? I'd like
Yeah,
to follow you. I'm not a big investor, but I'd like to follow along. I
yeah,
trust you, okay? Because that's something AI is never gonna give another human being is trust.
yeah, for sure, no, I love that, and so to kinda round it out, I wanna do some rapid fire questions with you.
Okay, sure.
Uh, alright, so what's the one daily habit that keeps you performing at your best?
Going to the gym every morning.
I agree, I'm on that train.
Okay.
What's a piece of advice that you'd give your younger self on day
My
1 of your career?
learn to spell faster.
Yeah, for sure. Book, mentor, or experience that's most shaped how you think about leadership.
Ogilvy on Advertising, printed in 1983. It's probably the most prolific business book, underrated business book out there. I try to read it at least twice a year.
Okay, I haven't heard of that one. I'll add it into the
Oh,
list.
you'll love it. You will
Yeah,
love it. He really invented direct response advertising, but he started his own firm, and the things he has in there, I'll tell you, one of the things that I think is most important, it reminds me of my days back at Goldman, is any institution is the lengthened shadow of one person.
mm,
I'm like, "That's interesting."
yeah,
And he goes into, like, always ask for the even, like, the billionaires I work with, they're like, they made a lot of money in real estate because their parents and grandparents were always palms up, like, palms up. What's the second rule of real estate? Always
yeah.
be raising capital, palms up. These are the things that the wealthy do that the middle class don't because they just feel intimidated or they haven't exercised that muscle yet.
Hmm. What's one investment you're glad you didn't make and why?
There's one on the tip of my tongue. I made the investment, so it was a disaster. I talked about that. So
Yeah.
you learn a lot when you lose, some money on that, right? What is one? Damn, that's a great question. I'm gonna have to get back to you on that one. I know this is a recorded
That's all right.
podcast, but there is one, and I'm looked at. I'm like, this is. Oh yeah, it was a it was a aerial drone fencing business by a young professional first time founder, and it's sort of like a culture where they all hire their friends and then they can't afford to pay each other, and they were like a lot of conspicuous consumption on an Instagram. I'm glad we didn't make that. I'm not going to mention the name, but that was something that I'm like, and you look at it today, you're like, ooh, because I can
Yeah.
always tell like if founders are real or neurotic or not, and certain things, and
Yeah.
that's not to say they
And
don't
kind
have
of on
their
the flip
place.
side of that question, in a role like yours, when there is a deal that kind of goes, sideways or you lose money, how do
Uh-huh.
you sort of mentally wrap your head around that and then kind of bounce back from communicating to the people whose money you invested in, and sort of
Yeah,
don't let
I said, look, we have a problem. but I have a solution. And you never go to someone with a problem without at least, a couple solutions. I've been able to work with some investors on some deals that went wrong into other things, which is fine.
Yep.
But that's it's the point of, venture capital and founder shares and, nothing, you can do a lot more. You have a lot more creativity in how you're able to help those investors. But I always know, I don't want to but I'm upfront, I'll just be like, look, I got bad news. Right? And I had one exit that didn't go well. It was like a reverse split. And even though the stock went up, it was IPO'd because the bad news was not communicated to me, was that the CEO was in the hospital for heart problems, even though he was older. And the new CEO didn't have anything idea what was going on. And they ran the phase 2 trials under the ground and the stock just burned. So, they could have communicated that to us, that, there were health problems. I know some people that have a rule that they won't invest in any CEO over the age of 65. It's just, I'm not saying there's a problem with that, but I'm just saying, there's a lot of energy to being an entrepreneur. We do, if they've had many exits and, those guys, because the problem is that that's all they're going to do. That's all, or their wives will leave them because they only know one thing is to build stuff. That's what they like. It's an addiction to them. It's part of their identity. But if they also didn't do it, they'd have to live at home. And we all know what happened during the pandemic, right? So, these guys love what they do. It keeps them happily married. And, I mean, there's CEOs that we've seeded who are older than that, but that, at that time, but they've also delivered a lot of value because, again, they've done it many times and they have the network to help them get there.
Yeah, I love it. Which ties great into the last question. In your own words, define what Built for This means to you.
I think it means having an idea and understanding for what entrepreneurs are doing who are still who are in the trenches, right? I think a lot of the people who are listening to you, they're looking for leadership and advice to be able to talk to investors quickly and efficiently, but that doesn't necessarily mean transactionally. And I think learning how to build something and working with this, you get the aspects of investors that probably a lot of these people would not have access to or exposure to if it wasn't for this podcast.
Love it. And so I know you mentioned how people get a signed copy of the book, which is great. If anybody wants to follow, order, or keep track of what's going on for you, what's the best way to sort of keep tabs and stay in touch?
Send me an email at sal@investinglegacy.com. I'll onboard you to our family office. We did have, you can go to Brahmin Partners, but I don't think you can actually subscribe to the newsletter there. But if you do, there's, I think, a newsletter opt-in on salvatorebuscemi.com. But to keep it really straight, just send me an email, sal@investinglegacy.com. I'll have a new URL at some point in the future, but in the meantime, HubSpot doesn't want us, we're very careful with how we use HubSpot. We've been in jail before.
That's fair. That's fair. Well, I appreciate it. It was so great to connect with you and learn more about kind of how you approach things and where it all started for you. And I look forward to staying in touch.
Same here, Jenna. I appreciate it. Thank you so much.
Thanks.